Good afternoon, everyone. Sarah Barker with Connect Our Elders, and today is our Empowering Aging podcast. We have with us Chris Orestes, the president of Retirement Genius, and he's going to be educating us on alternative funding strategies for home and long-term care, being non-medical home care, where you're providing care within somebody's residential home, or all of the levels of senior communities. Thank you so much, Chris, for being with us today.
Well, Sarah, thank you. And thank you, everybody who's participating and listening in on our discussion. It's going to be a good opportunity to spend the next 20 or so minutes talking about some alternative funding strategies to help people pay for long-term care. There are a number of ways that people have available to them at the point that they need care that they could access to help them pay for that. That many people are just not aware of. And as people who work in the home care, long-term care, senior care world, you're interacting with families on a daily basis. And one of the biggest struggles that they have is how can they afford the cost of care? What options, what resources do they have to tap into? And we're going to talk about that today. Let's start going into our presentation. So I'm Chris Orestes. I'm the president of Retirement Genius. And as we said, we're going to cover alternative funding strategies for long-term care. Retirement Genius is a information and resource platform where we give people access to information and resources that will help them build a well-balanced retirement. We focus on financial information, health and long-term care, and lifestyle. It's our belief you need to bring these three elements together to build a well-balanced retirement so people can retire like a genius. So when we talk about long-term care, this is one of the more frustrating areas in the world of financial services, retirement, senior issues, because for the most part, as you have, I'm sure, encounter on a very regular basis, people just don't want to talk about it. They don't want to think about it. There's a lot of confusion. People are avoiding this topic. It's not a fun topic to talk about, think about. So many people walk around saying it's never going to happen to me. But the reality is 70% of people over the age of 65 are going to need to pay for some form of long-term care in their remaining lifetime. And they're just not well informed about the costs or how they're going to pay for that. There's confusion about the types of care, what's covered, what isn't. And a huge percentage of people, as I indicated, in fact, recent studies show 85% of people think it's just something that's not going to happen to them. And look, the reality is the most recent numbers show long-term care is an expensive proposition. I mean, look at the monthly costs of home care, assisted living, nursing home care. That's a national average. We know plenty of markets where these numbers are significantly higher. And what people get frustrated with is trying to figure out how to navigate the system. What does Medicare cover? What does Medicaid cover? Health insurance and Medicare, they're not covering senior living and long-term care. Medicaid, for a lot of people, is their goal. They want to get onto Medicaid, but guess what? If you get onto Medicaid, now you're a ward of the state. You're on welfare. Medicaid requires a spend down, and it's restrictive on your care options. So private pay is the one option where you remain in control and you're able to financially protect your family, decide where you're going to get care, decide if you want home care, you're in control of that decision, and you're not waiting to see if you're going to make it through to someone else's decision making for where you're going to get care, when you're going to get care, how you're going to get care. Now, certainly long-term care insurance is a viable option to help people pay for the cost of care, but across 335 million people who live in this country today, there's only 7.5 million in-force long-term care insurance policies. Now, and by comparison, just to give you an interesting statistic, there's 255 million life insurance policies in force in this country, just as a comparison. So think about what a huge discrepancy that is between long-term care insurance and life insurance. And when it comes to insurance, the simple fact is the younger and healthier you are when you purchase insurance of whatever form, the more the more coverage you're going to be able to get, the lower the premiums are going to be. And so for people who haven't prepared by purchasing long-term care insurance, which unfortunately there's millions and millions of seniors around this country who haven't, the question is, what do you do then? What are the other options that are available if you've waited too long and now you're at a point where you need care? You didn't get long-term care insurance, or maybe you do have a long-term care insurance policy, but it's still not enough to cover all your needs. It's not going to take care of everything. And now you're in that place in aging where you've got to start making some hard decisions about accessing care, supports, and services. Well, let's spend some time talking about alternative private pay options. One option that is a very plausible scenario to reach out to, particularly in a home care environment, is a reverse mortgage, known as a home equity conversion mortgage, or a HECM. This is a mortgage that's secured by the value of the home, and the advantages of it is you're able to tap into the equity of your home, taking out a sum of money, either in the form of a monthly income, a line of credit, or a lump sum. But you don't have to make monthly payments on what you've taken out for as long as you're living in the home. As long as you're living in the home, you can use the reverse mortgage money, and then you pay it back only after you've left the home. You need to be age 62 or older to qualify for a reverse mortgage. It has to be on your primary residence. There's going to be fees involved. There's origination fees, servicing fees. You're going to accrue interest on the loan while it's outstanding. And the current limit, the highest level you could take out, is currently $970,800. Now, another option that you should be well aware of and taking full advantage of is VA aid and attendance benefits, a monthly long-term care benefit that's paid to the veteran of an active period of war and or their spouse. So for the veteran alone, they could currently, in today's 2022 rates, is $2,050 a month they could access for long-term care needs. A veteran and a spouse together could collect $2,431, and a surviving spouse on their own could collect $1,318 a month towards their care needs. Now, to be eligible to use the VA aid and attendance benefit, you'd have to be honorably discharged from the military, having served a minimum of 90 days of active duty, with one of those days served during an active period of war. There's income and asset limits, just like if you were applying for Medicaid. And not anybody can get on it. The minimum age is 65, and you do have to have a disability and or a need for long-term care services to access the benefit. But it's a very solid option for you as home care providers to understand you have this and these other options to tap into to help people pay for care. Another potential is tapping into what's known as a senior bridge loan. This is a home equity line of credit that's secured against a home for what is needed on a monthly basis to cover the costs of care. So it's a relatively low barrier to entry to be able to access this loan. You only borrow what you need as you need, and the payments are made directly to whoever is providing that form of care. It's a bridge loan. It's helping you, for the most part, bridge the time it takes to sell the home if you're now at the point where care is needed, and the access to your equity in the home needs to be procured through the sale of the home. The desire is potentially to move out of the home, so you're trying to sell it. This will bridge the time it takes you to sell the home, and then it'll be paid back from the sale of the home to pay off that loan. There's also, for people who are in a spend down, the Medicaid compliant annuity. This is a spend down tool that's going to put money into a short-term single premium immediate annuity known as a SPIA. This is a way to keep income coming into the hands of a spouse who's not applying for Medicaid while the other spouse is. So one spouse can shelter some money, continue to have an income coming from a Medicaid compliant annuity while their loved one goes on to Medicaid and moves out of the home or is receiving skilled care in the home. The requirements for this to access a Medicaid compliant annuity and set it up is it's got to be irrevocable. It's non-assignable. It's a short-term annuity. It's established to provide an income for what the actuarial prediction of the person who's going on to Medicaid's remaining life expectancy is. And the state will be assigned as either the primary or the contingent beneficiaries if there's money left over in the annuity that hasn't been spent down. There's also a medically underwritten single premium immediate annuity known as again as a SPIA. This is an annuity that will pay out higher amounts on a monthly basis based on a person's health condition. So the more chronic somebody's care needs are, the more impaired their health is, this medically underwritten SPIA will actually pay out a higher amount of a monthly income to them based on their underwriting. The features of this are, again, it's a higher payout. There's an optional cost of living adjustment that can be added to it. There's an early death benefit rider. So if somebody were to pass away early in the onset of the annuity starting to make payments, they could recover money from their death benefit. You're going to be between the ages of 70 and 95, and the minimum to put into the medically underwritten SPIA is $50,000. So here's a way to establish a guaranteed income stream for the person receiving care that they will not be able to outlive. Once you've put the money into the annuity, you now have a guaranteed monthly income for the remainder of that person's life. Another option, and this is something we've worked on for many years, is called an LTC Life Settlement. This is a tax-advantaged, even tax-free way to pay for an immediate need for care. So for somebody who has 2 ADLs or more, or under 2 years of remaining life expectancy, they're able to sell off an unneeded life insurance policy through a long-term care life settlement, and then put the money into a protected account that's sort of structured like a long-term care HSA to make monthly payments towards whatever form of care they want. And this is recognized as a Medicaid qualified spend down. You got to remember that life insurance policies themselves are an asset, and they have secondary market or life settlement value. And I'm sure some of you have seen TV commercials advertising for people who no longer need or no longer want or no longer can afford a life insurance policy. They can sell that policy off to another person, an investment group, and receive money today that they can then use towards their retirement and long-term care costs. And this really has grown into a very mainstream financial option for seniors, and it's used by assisted living companies, home care companies, memory care companies across the board. Any form of care has been using the LTC Life Settlement now for well over a decade, pushing 15 plus years. This has been a very viable, growing mainstream part of the market for financial options to help people address an immediate need for care. Again, remember I said there's 255 million life insurance policies sitting out there in this country today. And here's a way to tap into them for seniors instead of abandoning those policies, surrendering them, or stop paying premiums and letting them lapse. Here's a way now to get a maximum amount of market value out of the policy and use it towards your financial needs. This has a lot of regulatory support across the country. It's a very well-regulated, established financial transaction across the country. Has congressional support. There's actually a bill that's been introduced in Congress to create a long-term care HSA that's funded by an LTC Life Settlement. And I'd say keep your eyes open for that over the coming year and two as that progresses and potentially gets passed and then instituted across the country as a new tax-free health savings account to fund care through this LTC Life Settlement. So quickly, who qualifies to use this? Well, remember, selling off a life insurance policy like this through an LTC Life Settlement, this is for people who have chronic or deteriorating health conditions. This is really your audience. It's for people And quite frankly, if you don't remember anything else about this, remember this. It is for somebody, the older and sicker they are, the more they're going to get for an LTC Life Settlement. In fact, if they're too young and they're too healthy, they wouldn't get anything at all. So the people you're talking to, the people who need care, are the appropriate people to talk about the LTC Life Settlement, but also the reverse mortgage, the VA aid and attendance benefit, the annuity options, the senior bridge loans. You have a whole array of options now that will work for the unique characteristics of the people you're dealing with who are challenged with the financial realities of aging and deteriorating health. As far as the type of life insurance policy that would qualify, it's any type of life insurance policy. So a term life policy would work, a whole life policy would work, a universal life policy would work, as long as it's $100,000 of death benefit or greater. Again, any form of care is going to qualify. And it takes about 90 days from start to finish to complete the LTC Life Settlement and get the funding in place for them to start immediately tapping into for their care needs. There's no costs, and then there's no more premiums whatsoever for the person who's going to use it. So once they've done the LTC Life Settlement, they don't pay premiums on their policy anymore. There's no cost for them to use the LTC Life Settlement, to enroll, to sign up. There's no wait periods. Once the money is available from the LTC Life Settlement, it's immediately able to be used for care. You don't have to file any claims, nothing like that. And again, this is a Medicaid qualified spend down because you're liquidating a life insurance policy, which is an asset. Just like, in fact, think of it like a home. They're both assets. They both have market value. And after years of making mortgage payments, you're not going to abandon a home. You're going to sell it. And after years of making premium payments on a life insurance policy, no one should abandon it without first finding out if they could sell it. And if they have an immediate need for care and they're using the money on their care needs, this will qualify as a Medicaid spend down. The tax treatment for this too is very advantageous because if somebody has 2 ADLs or more, or even they're at the point where their life expectancy is shortening to being 2 years or less, the proceeds from the LTC Life Settlement are entirely tax-free. So what I want you to remember from this presentation as we wrap up and before we move on to anything further in our discussion, for those
Chris,
people, yes.
So it seemed like the signal got affected. Would you mind going over that last slide again about the tax advantages, just in case for some reason for our audience it didn't come through?
Sure.
Because this is a really important factor.
Yeah. So if somebody does a life settlement, an LTC Life Settlement, and they have they are currently diagnosed with 2 ADLs or more, or 2 years of life expectancy or less, the funds from the LTC Life Settlement are going to be tax-free. So for the people you're dealing with, the people who need care, this becomes a very accessible and tax-advantaged way to tap into a life insurance policy that they might otherwise be discarding to be able to use towards their care needs. So I want you to remember that you have options. You have ways to help people pay for care, particularly those who haven't adequately planned for it. For those who went under the assumption it was never going to happen to them, or if it did, somehow it just gets taken care of. Well, you have a number of options. You've got tools in your toolbox. You've got the reverse mortgage. You've got the VA aid and attendance benefit. You've got senior bridge loans. There's different ways to use annuities. You have the long-term care life settlement. That's a very solid array of mainstream financial options that you can tap into to help a family pay for care. And really, quite frankly, if you're talking to families about your services and you're not talking to them about options for how they're going to pay for your services, I think you're doing them a disservice and you're losing out on opportunities. It's not enough to just explain your services hand people a brochure, and then cross your fingers that they're going to come back with a checkbook able to afford to pay for care. People are struggling more than ever right now on how are they going to pay for care. But if they have a home, if they were a veteran, if they served and they're a veteran, if they own a life insurance policy, if they have some liquidity that could go towards an annuity, those are all tools that you can use to help them pay for the costs of care. And instead of these people visiting with you and then never coming back because they're just not sure what to do and how to pay for it, you have the ability to head that off, have that discussion, make sure they're well informed about their options, about the tools that they have available to them that you could help them access by pointing them in the right direction. So this is something that you want to make sure you understand, that you don't have to be turning people away. Within a 90-day period or less, you could be helping people access the funding they need to pay for care. And you are well positioned to be able to use this because you're out there talking to these people every day. You're advising these people. They're coming to you not only for, are you a home care provider, but they're assuming you're an expert in all things around what you do, not just how to provide care, but what are the different types of care? How do you pay for care? What are the tools we can access to get to the care that we need? And that's what really will separate you from anybody else whether they're your competitor or just your colleagues. If you're taking the next step to give people information and access to resources to pay for care, that puts you just way beyond someone else who stops at that point, that line, and they're afraid to cross it. They're worried that they're going to either insult somebody by bringing up money or they're going to cross a line and there's going to be questions asked of them they don't know how to answer. You don't need to be the expert in this. All you need to do is let them know these options exist and point them in the right direction to resources like what we provide, organizations like ours that will help them get the information they need and then access these resources to be able to pay for their care. So what I'd love to do is invite you to contact us at any time. We'd love to send you a free white paper on these alternative funding strategies to pay for long-term care, give you more information about this. So reach out to us anytime, 888-627-3735. Or we always encourage you to go to our website, retirementgenius.com, and there you'll find more information and resources on how you can access us. You can also email us at info@retirementgenius.com as well. So Sarah, enough with the commercial. I just wanted to make sure people understood, we're here to help just like you're here to help. It's important that they get this information. I wanted to kind of cover and go through this in a succinct way so that they understand here's a range of options. Here's a range of tools they can use in their toolbox. I hope we're getting the message across that you want to be a solution provider, not just somebody who's trying to sell a service.
Exactly, Chris. So I'm so glad that you came on today and provided education around the alternative ways to fund care. And I'm glad that you gave them the information so they can connect with you directly, because you and I come from the same mindset, which is educate, educate, educate. Because if we can educate people in the industry who are having these daily conversations and meetings with our nation's seniors and equip them with the knowledge to provide alternative resources, right? Because we all know in the industry that not every client you meet with for an assessment or that you do an intake call with is automatically going to have the funds to pay care. Unfortunately, though, too often they just move on and it's to the next family, where if they had this knowledge that we went over today, they would feel empowered to help that family figure out a solution. So I love the fact that you said be a solution maker, right? And I'm always teaching, don't just go out there slinging caregiver hours, It's not about that. We need to help these families figure out how they're going to pay for the care, because the majority of the families, right, across the country do not have $20,000 a month, let's say, to pay for care. So
no. I would assume if I'm you, I'm assuming anybody I talk to can't afford my care, can't afford my service, and you don't want to come across as a product or service salesperson. You again, you want to be a solution provider. You want to be an expert. You want to win their confidence by having the expertise, having tools, ways to solve their problem, not just giving them a menu of options with a price tag and say, which one are you buying today? That's not where you want to be. That's not the formula for success. So being well informed yourself, having access to these kinds of resources yourself, and then being able to give that over to the people you're working with, is just going to put you in a whole nother league. You're going to win their confidence. You're going to win their business by solving their problem, not trying to get them to sign on the dotted line and buy something from you.
And I would say, you're going to position yourself. If you are a senior care professional, you're going to elevate yourself as being an advisory level senior care professional when you can have these conversations with families, but also it will go a long way in strengthening your relationship with the referral partners in the community, regardless of the type of referral partner, because you are operating at an advisory level.
Right.
So, Chris, since we have some more time, I know when it comes to these alternative funding strategies, not so much the aid and attendance, right? But the reverse mortgage or the life settlements, would you mind spending some time dispelling myths that exist around these alternative funding options?
Yeah, I would say across the board for all of them, I think there are a variety of myths and misconceptions when it comes to reverse mortgages, and life settlements for that matter as well. These are both very well regulated transactions across the country. They are performed on an annual basis in the billions of dollars each. Billions of dollars of life settlements and reverse mortgages are done every year. You're certainly seeing a lot of commercials on TV, and that's because people want the information, and it works. People once they're informed of the fact that this is something that they can get to, they will then go to it. And if it wasn't, then you wouldn't be seeing the advertising, because obviously it works. These are things that have been available for decades to seniors in particular. And that's the interesting thing about these particular solutions, is they're built for seniors. If you're below the age of 62, you can't access a reverse mortgage. Most people who are going to do a life settlement are going to be in their late 60s, 70s, 80s, even 90s. So again, very well regulated, have become very mainstream, and are being accessed by the billions of dollars across the country, and have been available to consumers for decades now, and really are just kind of really growing and getting firmly on the radar screen for everybody. 10 years ago, you wouldn't have heard of this as much as you do today. And when I say be an expert, that doesn't mean you have to be an expert on reverse mortgages or an expert on any of these single solutions, but it's the expertise of knowing these solutions are there, that you have a variety of ways that families can access funding during an immediate need for care, not just, well, did you buy a long-term care insurance policy 20 years ago? No. Oh, well, I guess I can't help you. Well, no, wait a minute. There's a whole half dozen or more other options quickly. Well, wait a minute. Do you still own a home? Do you own a life insurance policy? Are you a veteran? Do you have funds potentially that could go into one of these annuities to set up a guaranteed income stream? So knowing that these exist, and then pointing the people in the right direction, who will then be working with them and working with you with the same goal, to get them the resources they need to be able to pay for your services, so that their needs are being addressed.
And I think, so in my opinion, these questions that you just said should be part of the intake process. It should just be included in the forms, because here's the thing. Even if maybe they don't qualify, right? They're not meeting the criteria. There is absolutely zero harm in sharing information, because even if it's not the right solution for that particular person, they have friends and they have neighbors. So the more people we can educate about these types of resources, the better.
Yeah, I think not adding this to an intake process is just it's a dereliction of duty in a way. I mean, here at a minimum, you can just put it on the table, and then it's up to them to do the homework and figure it out. But at least letting them know there's a variety of options here, and here's a little bit of background on them. Now you do your digging into it to see which one works for you, and you're standing by then to work with them to see through the process of getting enrolled in being able to start using your service.
What do you find is the number one fear of using a life settlement as an option to pay for care? Actually, let me back up before I ask that question.
Mhm.
What is the number one reason why people are basically abandoning these life insurance policies to begin with?
Well, there's a very high abandonment rate of life insurance policies across the board. People pay premiums for years and then they outgrow the need for why they bought the life insurance policy. You bought it years ago in case something happened while you were raising your family, and now your family's grown up and moved on. They all have their own life insurance for their own families. And one day, as a senior, particularly, we see this with a lot of seniors. They go, "Oh, wait a minute, we've been paying premiums on this policy for years and years. Why are we doing it? Let's just dump it. Stop paying premiums." And I've just seen so many families walk away from tens to hundreds of thousands of dollars of market value in a life insurance policy that they could have accessed on very tax favorable terms to address their retirement and long-term care needs. So it becomes either families outgrow the need for the policy, and or they just look at the premiums they're paying and say, I can't afford it. I don't want to pay for it anymore. And they let it go. The
So what is the
fear,
reason why they don't use the resource that we're talking about today, a life settlement? Is it purely because they're just not aware of it as an option?
for the most part, even as much advertising there is out there, as much awareness as has grown over, let's say, the last 10 years about it, it's still relatively unknown to so many people. I'd venture to guess that a lot of people listening to this session are hearing about it for the first time, and they're professionals in the business I got to tell you, the long-term care senior living world has been working with life settlements for close to 20 years, 15 years at least, where major assisted living and home care companies have had brochures, education sessions, trained their people on this and other of these other kinds of financial solutions, and still it's relatively unknown. So I'd say the biggest challenge when it comes to a life settlement is still so many people don't know about it. And then I'd say that one of the big fears of a reverse mortgage is somehow you're going to lose the home. It's going to be taken away from you. But that's not the case. As long as you're living in the home, the reverse mortgage money, you can use it. You don't have to make any monthly payments towards it. Now you're accruing interest. There's costs associated with a reverse mortgage. There's no costs associated with a life settlement. But you're not going to lose your home. You're able to keep your home. And even after you move out, you've still got like a year to be able to sell the home to liquidate and pay off the reverse mortgage, or use other resources to pay off the reverse mortgage as well. If for some reason the family decides they want to keep the home and they want to satisfy the reverse mortgage through other means, they could as well. But at the end of the day, you're not going to lose your home. And if you did a life settlement and sold off your policy, you're not going to have to pay premiums anymore. You're going to get a significant chunk of money today for an asset that you might have been throwing in the trash.
Do you find, or do you think that maybe there's pushback from adult children when it comes to utilizing one of these resources, right? Whether it is the life settlement or the reverse mortgage, because maybe they have differing opinions on what should happen to the home or the life insurance policy.
Yeah, well, listen, that certainly is possible, but for the most part, as we encounter families, and as you all know, when you're dealing with a need for care, it's a family endeavor. It's the whole family. So many members of the family get involved, and what we find the vast majority of the time is the family members would rather see their loved one use a resource so that they can stay independent, stay in control of their decisions, stay in their home, versus going on to Medicaid or going through the spend down and getting moved into a nursing home. If you can help a loved one stay independent using resources that they already own, that's a far better outcome than one of two things: either going, let's say, down the route of going on to Medicaid, or the other family members start digging into their own pockets to pay for this. So if the person who needs care can independently, through, say, one of these means, access the money they need on a monthly basis, and the other family members, the adult children, who are busy paying their own bills, probably putting kids through college at this point, they have a whole lot of pressure on them, and I know almost always that the family members would rather see that than they digging into their own pockets, or their mom or father having to spend down and get put into a nursing home.
I would concur with that, Chris. And I think sometimes, well, let me say this, I'm always talking about proactive education, transparent conversations within the family unit before the time comes, right? So,
Right.
Sometimes the adult children are going to be completely fine if mom wants to do a reverse mortgage or sell the life insurance policy to fund the cost of care. But my prospective client has had in their mind, oh, no, I have to hang on to the house so that way I can give it to my daughter or my son, when the daughter or son are completely fine with mom, let's say, utilizing it to pay for care. But there's often a disconnect because those transparent conversations are not being had right soon
Right.
enough.
Right.
Mhm.
Waiting to the last second to start having these conversations is not a plan for success. So the sooner family members are having these conversations, and the sooner those in the senior care world can help guide them to have these conversations, the better the outcome is going to be for everybody. And it's also important to remember, when it comes to the home and the life insurance policy, those are assets owned by the owner, and no one can block them from liquidating the asset if they want to. But we find, for the most part, it's a family inclusive decision and process. And usually the family members would rather see the asset used towards the needs of their loved one, versus somehow they're trying to hold on to it for some gain that they may
Mhm.
get years in the future, which is causing a whole lot of problems today to get through to the other side.
Mhm. Could you reiterate for the audience too? So the life settlement in particular, what can that be used on? What type of care? Is community, home care, what?
Yeah. With the life settlement, there's really no limit to what it can be used for care. You can use it for home-based care, assisted living, skilled nursing, memory care. Any form of care can be paid for using the life settlement option. The reverse mortgage is a little more limited because you need to be living in the home. So for those that are focused on home care, it's actually very advantageous, because by definition, those funds are intended to keep somebody in their home. So
Mhm.
if they want to stay at home receiving care, the reverse mortgage is a very good option. If they want to stay at home receiving care, the life settlement is a very good option as well.
Mhm. And the process, because, you know, typically by the time that somebody sends me a family, right? I mean, they're stressed and they're burnt out, high emotions, exhausted, right? And so if they feel like the process is going to be extremely long and complicated, arduous, they might just feel paralyzed and even going down the path of accessing a resource, even when they know that they should. So what is the process like? Is it really difficult, or is it pretty straightforward?
No, it's actually pretty straightforward. Either the case of using a reverse mortgage or a life settlement would take maybe 90 days. There's going to be no costs whatsoever involved in the life settlement. There will be costs involved in the reverse mortgage, but those will be rolled into the reverse mortgage itself. So that just becomes part of the loan. With the VA aid and attendance benefit, that can be a more arduous process. We all know stories of it taking a year to qualify for the benefit, but if you get some guidance from people who know how to navigate that system, you could work through it pretty seamlessly and quickly, and that doesn't cost you anything either. So from a relative time frame perspective, these are all options that are going to give you access to liquidity pretty quickly. Let's say 90 days or less, and really aren't going to have any out-of-pocket upfront costs for you. Life settlement, no cost whatsoever. VA, no cost whatsoever. Reverse mortgage costs that are rolled into the loan that, again, you don't make any payments on until the loan is paid back after you've left the home. So from a cost perspective, from a process perspective, really very low barriers to entry to be able to at a minimum look into, do these make sense? Could you qualify for them? And if they do, move forward to actually use them. There's really these are relatively simple ways to access resources from assets that somebody already owns and is paid into for years.
And is it a hand-holding process, for these families, step by
Yeah,
step? Retirement Genius would be there to
yeah,
walk
yeah.
them along?
Right. We work with the best life settlement companies in the industry. We work with reverse mortgage companies, and we work with VA companies that really, all of them know that they need to hold your hand through the process. They're not going to just send you a big packet of information and tell you good luck, send it all back to us when it's done. You're going to have a lot of help and assistance to get through the process. There will be advisors and case managers that are going to work with you, with the family, from start to finish, to make it an efficient and as fast as possible way to move from point A to point Z and get it done.
We're going to have you back on at some point, because I know a while back you and I had a meeting and you actually shared some success stories with me, and showed me the numbers around it and what it was able to do for families. So we'll have you come on and present those case studies
Oh,
of
I'd
how you
love to. I
guys.
mean, as a sort of, just as a quick little, I mean, I showed you the numbers on the VA benefit. So with a reverse mortgage, what you're going to qualify for is a percentage of what your equity in the home is, what the value of the home is, what region of the country you live in. And for life settlements, the average that people are going to access of the face value of their policy, probably between 20 and 30%. Now, the more impaired somebody's health is, the more they're going to get. We've certainly seen life settlements where people are going to get upwards of half the death benefit of the policy in their pocket today. So it's a range based on their health and their age, but it can be very significant money that they can use towards their care needs.
And I mean, it's definitely better to do that versus just abandoning the policy. But let's say that there's any, still a partial desire to hold on to the policy. I think that that's where the situation needs to be assessed with a professional, right? Like, what are your desires to stay in your home or this particular community? Here is the option for you. So let's talk through it. Right? Because even though you partially want to hang on to it, you may decide that your desire to remain at home is much stronger than maintaining the policy.
And there's also the option to only settle a portion of the policy, hang on to some, settle some and we've seen families who will kind of split up a policy that way, keep some and settle some to meet their financial needs.
Oh, I didn't know that. I think that that's brand new knowledge for me. So thank you for
Yeah,
sharing that.
yeah, yeah.
Okay, so there's all kinds of flexibility and
There is.
creativity that can happen. I think that, everybody keeps hearing us say, get educated on it at a bare minimum, have the confidence to be able to express to the families that you're dealing with, or even your referral partners out in the community, that these resources exist. But as you said, there is no expectation to be an expert because we have people like you, Chris, right? Where we say,
Right,
yes, I informed somebody of this. They'd like to look into it further. And then we would just hand it off to you.
right, right. We'll take it for you from soup to nuts, but it's your job to be educating your families, your clients, that these options exist, and then put them on the track to getting the information and then moving forward with one of these solutions if it's going to work for them.
Mhm. Would you like to share too with the audience your background even before you got into this? Because I remember having met you years ago that you had kind of an ideal background that set you up for what you do now.
Yeah, from a couple of perspectives. One, I when I started my career, I was in Washington D.C. and I had a political career. I worked in the White House. I worked on Capitol Hill for the Senate Majority Leader, and I was a lobbyist for the insurance industry for a number of years. And I really got to learn the insurance and financial services world that way. And one of the areas we focused on a lot was the growing baby boom population, and the need for financial solutions to address what we knew was coming and we know is now here. And also, my family actually is a pretty big provider of long-term care services, and own a number of assisted living and nursing homes, in the Northeast. So I've had exposure from both sides of the equation, from the care provider side and from the funding side, of how to meet those needs that so many families are struggling with. Because look, when families go online to Google about long-term care services, they're looking for two things: what's the type of care they can get in their area, and how are they going to pay for it? That's what it boils down to. And really, once they find what they want, how are they going to pay for it? That's the X factor. And that's where you come in. That's where we come in to address those needs. And we've known for years, going back to when I worked in Washington, D.C., seeing the family business, what they work with on a daily basis. It's how do you get families from need to desire to access care to being able to pay for it. That's at the end of the day, you can give them a great brochure, you can have a great meeting, you can buy them a great lunch, but if they can't afford it, they can't afford it. But for a lot of people who can't afford it, there are tools to help them overcome that, and that's the key for you, to have those tools in your hand.
There are, and I know when I started in the industry, that was the one thing where I literally was losing sleep and was so distraught when I would meet with those families that were not necessarily like poor, right? Like they were hardworking Americans, and it's really the cost of care is expensive, right? And so, before I started learning about resources, I met you and I started learning about life settlements. I started learning about reverse mortgages, aid in attendance. I would walk away from those living room assessments just heartbroken for
Oh,
these individuals because I felt like I couldn't do anything to help and they deserved options. They deserve some hope on figuring out how they were going to be able to pay for some care. So, I mean, huge advocate. Again, get educated, know all the resources. Don't just be out there focused in your little lane. Yes, that's your job, but you really want to be in a position where you can offer these families solutions. And so I highly recommend that you guys, if you're not already acquainted with Chris and Retirement Genius, I heavily encourage you to go to their website, to reach out directly with Chris on LinkedIn, and start learning about the breadth of services that they can provide, because we owe it to the seniors in our nation. Yeah, I'm not going to make any bones about that. We have a responsibility to support our nation's seniors. So, Chris,
Agree.
do you have any final thoughts around the topic for today?
Well, I just, again, thank you so much. It's a real pleasure to be able to spend time with you, Sarah, and talk about this. And for the listeners out there, take to heart what we're saying. We've been doing this a long time. There's a big difference between people who can put solutions on the table versus those who are just trying to sell their product and move on to the next sales call. Be the solution provider that's going to build your business, that's going to help more families. And don't be afraid to access these kinds of resources because they're readily available to you. They're not going to cost you anything. They're not really going to cost the families anything out of pocket, at least. And this is going to make a big difference in growing a successful practice, a successful business, and helping the families that need help.
Mm-hmm. Well, thank you so much, Chris. I will ensure, so those that couldn't attend live today, this will be recorded and uploaded to the Connect Our Elders YouTube channel and shared all over the place because, as a reminder, Connect Our Elders is all about empowering aging so we can redefine the senior care industry and how we are serving our referral partners and our families. And part of doing that is getting to know Retirement Genius. So thank you for tuning in today and look for the recording. Take care.